My name is Dan. I'm the Customer Learning and Development Consultant here at Right Capital, and I'm really excited to be here with you today for this presentation on the retirement analysis module. The retirement analysis is in a lot of ways really the flagship module within Right Capital, and that's for good reason, right? It's where we can model what-if scenarios, answer client questions, address client concerns, and ultimately, it is the best place to build a comprehensive proposal for clients and really, at the end of the day, demonstrate the value of the recommendations that you're making. So for a lot of advisors, getting comfortable using the retirement analysis and becoming more adept at using the action items and making changes on the fly, it's really an important aspect of, not only learning to use Right Capital, but it's a crucial step in integrating the software into your client presentations and into your practice. So the goal of today's presentation is to assist you in doing exactly that. So let's take a quick look at our agenda here. The main focus today is going to be answering the most common questions that advisors have about the retirement analysis module. We worked very closely with our support team, and we put together a really solid list of the top questions that advisors ask the most often about this module. So we'll be walking through each of those here today within the context of a case study for a pre-retiree. Of course, in doing that, we're also going to touch on some nuances when it comes to things like using the action items, working with multiple proposals, and even taking a look at some of the different projections happening in the retirement analysis. We're also going to be highlighting a handful of new settings today that were recently added to the retirement analysis as a result of your feedback. So I'm excited to show those off today as well. Towards the end, I am, of course, going to touch on some advisor resources that you have at your disposal as Right Capital advisors. And for those of you that might be brand new to Right Capital or new to our webinars, I want to remind everyone of two things. Firstly, these webinars are recorded. So if you have to step away at any point today, no worries. We do record and then post the recordings of these webinars within our help center. So I will show you towards the end here where you can find the recordings for not only this webinar, but all of our other webinars as well. And last but not least, I want to remind everyone that these webinars are also interactive, and we will be doing a live Q&A at the very end. I've got about 30 to 40 minutes of prepared content for you today, but ultimately, I want to hear from you. So if you have any questions at all as we're making our way through today, I encourage you to write in. You should find a Q&A field in the Zoom control panel on your screen. Considering our webinar today is dedicated to answering your most asked questions, I do want to make sure to dedicate extra time today to that Q&A portion of the webinar. So please don't hesitate to write in. I'm here to help however I can. Great. So bear with me just a moment, folks. I'm going to switch over to my Right Capital login here, and we can get started. All right. So we're going to be taking a look today at a case study for Steph Gingrich. So let's pop into that client plan here. So here we have a joint plan for Steph and Ryan. And I do want to start things off today by taking a quick look at the blueprint module in the profile, just to get everyone acquainted with these clients. So just taking a quick look over the blueprint area here, we can see that these clients are currently in their early 50s in terms of total net worth sitting at 1.4 million. We can also see we've got some children in their early to mid 20s entered here as well. And ultimately, we can see a breakdown of their assets and liabilities. We can see they're doing a pretty good job of saving into their respective 401k accounts. We've got some Roth accounts here, an HSA, some joint taxable savings. So, generally speaking, that is what we have here in this plan. We can also take a quick look at the goals here for these clients in terms of retirement age. They are both looking to retire at their respective age 65 here. We have a handful of additional goals to do some traveling in the years after they both retire. We have a primary home relocation. I believe these clients have a goal to purchase a new home in Florida later on in their retirement years. And ultimately, we've got long-term care costs and a legacy goal here as well. $1 million target amounts to leave behind to their children and grandchildren. We can also take a quick look at just an overview of their income, savings, and expenses, get an idea of what these clients are currently earning in terms of their salaries, both expecting Social Security benefits around full retirement age. And we can see that they're both still contributing to all of their various investments, 401ks, IRAs, etc. So, that's generally speaking what we're working with here. That's all of the key information that's been entered into the profile section of this client's plan. And with all of that in mind, let's pivot on over to the retirement analysis area and start to take a look at what we have here. I want to kick things off today by answering the most common question that advisors new to the platform tend to have when they see this module for the very first time. And that is, what is the probability of success? And what's the difference between the probability of success for the current plan and the proposed plan? So I suppose that's really two questions wrapped into one here. But for anyone who's been with us for a while, this might be more of a recap for you. But for everyone here today that might be new to Right Capital, this is going to help us establish a solid foundation before we dive into some of the more complex questions here today. So first things first, what we have here in terms of the probability of success, this is Right Capital's Monte Carlo simulation. What's essentially happening here is we're taking the client's plan as it's entered. So all of those profile inputs that we just reviewed, all of their income, expenses, and goals, all of their assets and liabilities, we're running all of that through 1,000 different trials with 1,000 different levels of market volatility factored into each and every trial. And what we have here in terms of the probability of success is the percentage of those 1,000 trials that's able to make it to the end of this client plan. So whatever that might be. In this case, that's going to be age 90 for both of our clients, making it to the end of the plan without ever running out of money. And this confidence chart here that I just opened up on my screen, this is really a visual representation of the Monte Carlo analysis. So we can see all the possibilities, great market conditions and not so great market conditions. And at the end of the day, we can see all of the range of outcomes that we have. And I always like to point out that the median trial here, that solid blue line running through the center of this chart, the median ending asset value, that $6.7 million figure, this is the same figure that we see in the green bar chart on the probability tab. So that's a high level overview of what we're working with here in the retirement analysis. The next part of that question is, what's the difference between the current plan and the proposed, which is another important piece here. So generally speaking, our current plan is always going to be a direct reflection of all of our profile inputs. So everything that we just reviewed in the blueprint module, that's what's going to build out this current plan. And this is really meant to represent the client's current financial picture, their current trajectory as of today with no changes. So we have their current plan sitting at an 83%. The proposed plan, on the flip side, uses the current plan as a baseline. So that's going to be our foundation for our proposal. But we can then make changes to the proposed plan using the action items. So this is a checklist, essentially, of all of those important inputs, all of the variables that make up our plan. And by manipulating variables here, we can say, what if our clients retire a couple years later than they're currently targeting? What's that going to do to our plan as a whole? We can make those changes, click refresh, and immediately see the impact on the probability of success and that median ending portfolio value. So just wanted to start things off here today by addressing that first and foremost. For those of you that might be new to Right Capital, that is sort of the foundation of the retirement analysis. Current plan is based on the profile. Proposed plan is based on your changes, what if scenarios, and proposed items. Great. So the next thing that I want to talk about here today is working with multiple proposals. And we're going to be answering several questions here, but the main one is, how can I add additional plans to create different proposals, model different what if scenarios and compare and contrast those against one another. So the first thing I'll mention in this regard is that you're not limited to just one proposed plan. In every plan that you create, initially, you will have an original current plan and an original proposed plan, but you're by no means limited to a single proposal. You can always create additional proposals by clicking the pencil and paper icon to the right of the current plan here. And within this data entry drawer, you're able to create new plans. So if I click add a new plan, that's going to add a new plan to my list here. If I just go ahead and click OK to save that, we'll immediately notice a small change here. On the left and right side of the analysis, we now have the ability to choose from these drop-down menus which plan we want to see on the left and on the right. So a good rule of thumb to keep in mind here, on the left-hand side, whichever plan that you select here is the one that you're currently making adjustments to within the action items, whereas the one selected on the right-hand side is simply for comparison. So left side is adjustments, right side is comparison. You may have noticed within that drawer that when you're looking here to create some additional plans, there is an add a new plan button in the lower left, but you may have also noticed if you hover your mouse over an existing proposal, there's also a copy button that appears. So I want to briefly address another common question, which is what is the difference between adding a new plan and copying a proposal? And the main difference is adding a new plan is essentially going to start us off with a blank slate. So if we take a look at that new plan I created here, once this loads in, we'll be able to see that it's the same as our current plan. It doesn't have any changes factored in. Whereas, if I were to make a copy of an existing proposal, that's going to carry over any changes that have already been made to that proposal. So this can be really helpful if you've already done a lot of work dialing in a lot of items into a proposed plan, and you just want to spin something off of that. Maybe make one or two small adjustments and compare those two proposals against another. Copying an existing proposed plan is a really helpful way to save yourself the trouble of having to redo all of those changes you made up front. You can simply copy those into the new plan, make those one or two adjustments, and you'll be good to go there. So if I want to demonstrate that quickly for all of us here today, I can click copy on our existing proposal. If you'll remember, I did make some adjustments to the retirement ages here. So if I go ahead and click save and select this one on the left-hand side, we'll be able to see that those changes I'd made to the retirement ages did carry over into this plan I copied. So that's the main difference between adding a new plan and copying a proposed plan. I did see a question come in here once or twice that I do want to address quickly. When it comes to adding new plans, there is no limit in terms of how many plans that you can add. If there is a limit, I've certainly never seen it. I've seen, examples of, plans with, almost 100 additional proposals here. So you can essentially create as many additional plans as you need for a given household without worrying about hitting some sort of cap. So I wanted to address that as well. All right, while we're talking about working with multiple proposals, I do want to make sure to touch on a few of the more specific questions that we tend to get when it comes to the action items. Now, these are really the engine that keeps the retirement analysis running. So getting comfortable using these and knowing where to go and what to click to do what you need to do can be really valuable. So the first question I want to address here is, what if I need to update something and I don't see it listed in the action items? So you'll notice to start things off here, we have a pretty limited selection of variables that we're able to manipulate within this proposal. And we start things off with a parsed down version of your plan inputs just to keep this from being too overwhelming. But if you're ever looking to make an adjustment to something that maybe you don't see listed here, know that you can always click the edit button in the lower right. And this is going to provide you with a full checklist of every single input, every parameter feeding in from that client's profile. So to add something new to the action item display here, all you need to do is check the box next to that item. That's going to be pulled into the client plan, into the action item display, and it's going to allow you to make changes to that item. So maybe we want to see some changes to the healthcare costs, for example. We can check off those boxes, click the save button, and those are going to be added to the action items here, allowing me to make adjustments, make those lower or higher potentially, and we can see, the impact on the client's plan as a whole. I will say, just in terms of, general good practices when it comes to the action item display, it can be beneficial to be a little bit selective here with what you choose to include. While you can include every item by clicking select all here, that will make the action items display on your screen pretty lengthy. So, if you want to cut down on the amount of scrolling you have to do, if you want to make it a little bit easier for you to find the items that are the most relevant to those clients, it can be beneficial to be a little bit selective with what we choose to include and when. In that same vein, something else that can be helpful that I like to point out is that you can also rearrange the order of the action items, which can be helpful for maybe dragging things to the top that are a little bit more relevant to these clients. And maybe these clients, maybe we're preparing for a meeting with these clients and we know we're going to be talking about their savings. You can drag those up and down here to rearrange the order of those. So maybe we want to talk about the joint taxable savings first, then the 401k savings. Similarly, maybe we know we want to talk about retirement healthcare costs. We can drag those to the top, make sure that those are the first thing we see on this page. So you can organize these items within each section however you'd like to really make things a little bit more streamlined, a little bit more tailored to each and every client that you're working with. So just an extra pro tip for you there. The next question that I want to address here is how can I add something that maybe doesn't exist in the current plan? Of course, clients might have goals that they didn't enter into their current plan, but maybe we want to see in a proposal if that's something that we can make happen. A great way to add something like that is again to click the edit button in the lower right, and then at the bottom of this data entry drawer, you'll find an add new items button. And within this menu, you can choose from, a list of all of the same inputs that you'd find back within the profile. So maybe these clients do have a new goal, right? These clients have some children in their early to mid 20s. So maybe one of them's gotten engaged and we want to see, can we afford to fully fund their wedding? So, we can add something like a wedding goal to this proposal. We can enter the dollar amount for that wedding. We can choose when that's going to happen. And then by clicking save here, that's going to be added to just the proposed plan. So that way we can compare, the current plan without the wedding goal to the proposed plan with the wedding goal. And any items that you add directly to a proposal will always be marked by this green dot on the left here. So if you're ever unsure, is this something coming from the profile or is this something that I added here to a proposal? Just look for this green dot here. That's going to be a quick and easy indicator for you as to whether or not that's a new item that's been added to a proposal or something feeding in from the profile. One more question that I want to make sure I address as it relates to the action items. And that's going to be, how can I make changes to variables besides the one that's listed to the right of an action item? So generally speaking, if you're finding yourself needing to change some of the other parameters besides just, the dollar amount of something like a wedding goal, for instance, the first thing I want to mention is if it's something that you've added directly to a proposed plan, like we just did with this wedding goal, know that you can always click back into that goal and fully manipulate all of the other fields. So you can change the name, you can change the owner, you can change the timing, so on and so forth. So for something that's been added direct to a proposal, you can always click into those items to update all of the other variables. When it comes to something feeding in from the profile, something that's been entered into their current plan, while you can click into these items to view the other variables, you won't be able to adjust these here in the retirement section. So if I wanted to change something related to their retirement living expenses, for instance, in order to actually update these other fields, I would need to click back into the profile area and change that item there. So that is something to keep in mind when it comes to updating any inputs, any data entry cards that have been entered into the profile. You will need to click back into that area of the profile to update, the other variables besides just the ones listed here. At the same time, though, something I also want to make sure to walk through here today is, how you can essentially replace certain items from the profile with new items when that's something that might be necessary. So let's actually walk through a more specific example here. Let's go ahead and add Steph's salary to the action items here. So a good example of when something like this might be necessary is, maybe you have a client who's maybe planning to take a higher paying job in a couple years, or maybe they're Maybe you're looking to model something like a partial retirement scenario where they're going to, drastically reduce their salary at a certain point in time for the remainder of their pre-retirement years. That's an example of a situation where, you know, updating just the dollar amount of the salary isn't quite enough. We do need to make some adjustments to the timing of the salary as well. And that's a good example of, we can actually turn this item off for this proposed plan and then add new items to replace it. So that's going to be a good option for you in cases like this. So let's walk through this together. Maybe this scenario is going to be let's actually create a full scenario from scratch here. Let's make one of our proposed plans a partial retirement scenario. So we'll use the proposed plan 2 for this. Let's go ahead and name this partial retirement scenario. I'll click save there. We have this selected on the left-hand side, so we know that this is the one that we're making adjustments to. And then we'll want to go ahead and re-add Steph's salary so that we can turn that off within this proposal. So once this is added, I'm just going to enter $0 here, click refresh, and that's going to turn off Steph's current salary in our proposed plan here. The next step would then be to add new salary cards to replace that existing salary card. So in this case, we'll probably want to add 2 salary cards. So under income, we can click salary and add this first salary card. Maybe Steph's going to continue to earn $80,000 from now until the time she turns, let's say 60. We can use that as our first salary card. Click save to add that to our proposal. And then we can rinse and repeat that process. Click the edit button, add new items, add a second salary card. This time we're going to cut that salary down a little bit to model, that partial retirement scenario, taking maybe a part-time job at that point. We want to make sure that that starts right after the other one stops. So Steph's age 61, and then we'll have that end at her retirement age, which is 67 for this proposal. So that's a relatively simple example, but that's a great way to just showcase the fact that you can turn off items from the profile and replace those items with different scenarios to model all kinds of what ifs and proposals for clients. Last thing I'll say in regards to adding new items like this, you'll notice that I didn't rename those items as I entered them. So, it can be a good practice to maybe just name those cards something that's a little bit more recognizable. So maybe we want to know that this is the salary from now through 60. We can change the name there to make that a little more clear. And then we could also rename the second one 61 through 67, just to provide a little bit of visual clarity here in the action items. So that can be helpful as well when you're adding new items like this. I saw a question come in a couple times here related to adding new items that I do want to make sure I address now before moving on. And I'm going to go ahead and actually read one of these questions and just walk through this with everyone here. When adding new items to my proposed plans, I find that sometimes I'm accidentally making adjustments to the wrong proposals. Is there a way to make an adjustment to just one proposal without impacting the rest? That is a really great question, and that is certainly something that we can do here. There's actually a trick that I definitely want to showcase here that's going to allow you to do exactly that. So first things first, when you add a new item to a proposal like this, something to keep in mind is it does actually add that item to other plans as well. So when you add a new item like an additional salary card, maybe, that is going to get added to our other proposals as well. It's going to add it across the board to our action items for all proposals. That being said, a lot of the time when you're adding specific items to specific proposals, you might not want that to happen. You might want that item to just impact the specific proposal that you're working on. So there's actually something we can do here to make that happen. So I'm going to go ahead and reselect this scenario here on the left. I'll actually remove one of these cards. So I'm going to go ahead and delete this and then re-add it in a way that, won't impact my other proposals. So to start things off here, we can click the edit button in the lower right, add new items, go ahead and add that salary card just like we did before. The key here is to dial in all of our variables except the dollar amount. So the one that shows up on our action item screen, we want to leave that one set to 0. So we can go ahead and dial in the timing here. That salary is going to be from now through age 60. We can click save. Maybe we want to add that as the name as well. Click save. And that's going to add that to our action items here. But because the dollar amount as zero is set to zero rather, this won't actually impact the plan until we enter a value here. So by doing it that way and sort of separating, adding the card and inputting the value into two separate steps, we can add that card or add that item rather to our specific proposal for that partial retirement scenario without it impacting our other proposals. So if I go ahead and click back into that other area, we'll see that's set to zero. That's turned off for the other proposals. So that's a great pro tip for you here. I'm glad someone asked that question. If you need to add those items to your specific proposals without impacting the others, just leave the dollar amount or the percentage at zero in that item as it's added, and then turn up that slider or type in that value once it appears in the action items. All right. So I do want to round things out here in the action items by answering one last question that newer advisors tend to have. I'll keep this a bit brief, but we do tend to get questions fairly often regarding the strategies here in the right-hand column. What's the debt strategy? What's the tax strategy? And so on. So I do want to quickly explain in general what the strategies are and also show you where you can find some more information on each one. So generally speaking, taking a step back here, the strategies column of the action items is a place where you can implement more big picture strategies into a client's proposed plan that you're working on. So rather than adjusting a specific variable like we have on the left-hand side here, we can implement larger strategies that have a broader impact on specific elements of a client's plan. Some of these strategies are tied to specific planning modules. So the tax strategy, for example, is tied to the tax strategies module in the tax tab. So you can use, some of these dedicated planning modules to dial in specific tax strategies in this case, something like Roth conversions maybe. And then you can turn those on in your proposed plans by simply turning on the tax proposal in that tax strategy item. So, that's a good example. Something like the debt strategies corresponds with our debt management module. Tax strategies, of course, the education strategy corresponds with our education module. So those are just a couple examples there. Other strategies correspond with specific model types. So these aren't dedicated planning modules, but one of the things that we can do in Right Capital is create custom models for things like model portfolios. What asset allocation do we want to see in our proposed plan? Maybe a glide path. How do we want their investment allocation to transition over time? And even retirement spending strategies. How do we want those retirement expenses to adjust out into the future? Do we want those to increase with inflation? Do we want those to decrease at specific ages by specific percentages? So some of these strategies are tied to models. So generally speaking, that is, just a high-level overview of the strategies here in the action items. I do want to take this opportunity to pop into our help center and just show everyone where you can find more information on all those different strategies if you're looking for it. So if you click the chat bubble in the lower right and then click search our help center, that will take you straight to the help center homepage here. And we do have an article dedicated to the action items in the retirement analysis. So if you search action items, should be one of the first things that comes up here. And in this article, there is a section towards the bottom that explains each and every strategy in the action items, what they do to the plan, which module or which model type they're tied to. So definitely don't hesitate to take a look, at the action items retirement article in our help center, and you'll find a description of all of those strategies. All right. So continuing our trend here of getting a little bit more technical with each of these questions. The next thing I want to talk about here today are the two different types of projections happening within the retirement analysis. And we've already talked a little bit about the Monte Carlo analysis today, which is one of the two. But a question that our support team does tend to get fairly often is something along the lines of, uh, you know, why does the ending portfolio value here in, the probability tab for the median Monte Carlo trial not line up with some of the other numbers that I'm seeing? And usually when advisors ask this, they're looking at the comparisons tab. So in this plan, why does the comparisons tab say my clients are going to end their new plan, in this case, with 8.8 million, whereas the probability tab says 6.9 million? Now, that's a pretty big difference. So just to take a step back and to explain this a little bit more clearly, there are actually two different projections happening in Right Capital at the same time. One of those, like I mentioned, is the Monte Carlo analysis. The other is something called the baseline or the baseline simulation, the baseline projection. And these are calculated in different ways, and each of them serves a slightly different purpose as well. And when it comes to the Monte Carlo, this is really meant to be a simulation of market volatility. And the purpose of this is really to cover all of our bases and to help plan around some of the uncertainties when it comes to future market performance. And we can't know exactly how the markets will perform, which is why we have the ability to enter return assumptions in Right Capital, which are essentially, our most educated guess as to what, interest, dividends, and capital gains are going to look like across all of these different asset classes. And those can be based on historical data, which is what I'm using. Those can be based on forward-looking, analysis by industry experts. So, at the end of the day, what the Monte Carlo analysis is doing is it's taking your return assumptions, the growth, the volatility, and all of that. And it's using that to show us all of the possibilities, good and bad. So at the end of the day here, what the Monte Carlo allows us to say is, even though we can't predict exactly how the markets will perform based on everything that we do know, they'd have to perform pretty poorly for an incredibly long stretch of time for these clients to even come close to running out of money, which is unlikely to actually happen. So we can be confident that in 80% or 90% of market scenarios, you'll be perfectly fine. And that can be really valuable to be able to highlight for clients. But at the same time, what the Monte Carlo doesn't allow for, it doesn't really help us answer more specific questions from clients. It's great to say that we'll be okay in poor market conditions, but some clients want to know, how much can I expect to get from Social Security in a few years? What are my RMDs going to look like when I hit age 75? How how much am I going to need to, draw from my investments to fully fund all of my expenses and goals in a certain year? And that's where the baseline scenario comes into play. This is still using your return assumptions. So I want to emphasize that it is still based on either those historical or future-looking assumptions that are expertly curated, but it does remove the volatility component. It removes the randomness of the Monte Carlo and instead projects things out into the future in a straight line, linear growth fashion. So what this allows us to really zero in on is the answers to some of those more specific questions. And this is what most areas in Right Capital will use, including the cash flows. So the cash flows isn't really our focus today, but this is probably the best place to really demonstrate, the baseline scenario allows us to really say, based on that straight line linear growth projection, here's what your portfolio return is going to look like each and every year. And by having more specific values like that, we can provide more specific details in terms of cash inflows, cash outflows, net flows. How much are we going to need to withdraw to fund all of our expenses and goals? So all of that detailed cash flow information is based on that baseline straight line linear growth scenario. So I always like to really hammer home the fact that there are two different scenarios happening here, two different projections happening in Right Capital and in the retirement analysis. The probability tab and the confidence tab, these are the Monte Carlo. The comparisons, savings, and retirement details tab, these are all that straight line projection. Actually, in Right Capital, there are only three areas that even use the Monte Carlo analysis. We've already looked at two with probability and confidence, but the stress test is the third module that also uses that probability of success based on that Monte Carlo. Everything else in Right Capital is that straight line projection. So last thing I'll say here is that the baseline scenario in terms of ending assets does tend to be a little bit more optimistic than the median Monte Carlo trial. So this plan is a good example of that, 6.9 million versus 8.8 for the baseline. The reason for that is just removing that volatility component, having more consistent returns each and every year does typically result in higher ending assets for that straight line projection. But that is certainly not the case for every plan. I've absolutely seen cases where, that is not the case. So it's very plan dependent. Just wanted to highlight that for everyone here today. Something that I did see a quick question come in on that I want to highlight quickly. In addition to the baseline scenario, there is an additional feature in Right Capital that does allow you to implement custom return scenarios. So the baseline, this is what we use as a starting point. This is that linear straight line, projection. But of course, it is important to be able to test a plan for sequence of returns risk, take a look at what someone's assets might look like in something like a bad decade followed by slow growth. Maybe we want to see different market crashes occurring at different times. So the return scenarios do allow you to sort of re-inject a little bit of volatility into some of these areas that use the baseline presentation. So you're never limited to just that linear growth, straight line projection. Even in the cash flows, you do have the ability to implement return scenarios. There's a specific setting that I'd have to toggle on, but you can choose to implement those return scenarios in the cash flows. So I saw a question come in about that. I did want to quickly highlight that for everyone. And of course, I've already mentioned it once today, but the Help Center is going to be really helpful for you. If you are looking for more details maybe on return scenarios, feel free to search for return scenarios in our Help Center, and you'll find an overview of what those are, where you can implement those, how you can create your own custom scenarios. So lots of great information here. All right. I have one more main question that I want to get to here today, and then I am going to make sure to save as much time as possible for the Q&A here. So the last question that I want to dive into here, and the last question our support team tends to get on a pretty regular basis is, what's the difference between future dollars and today's dollars in the retirement analysis? So you might notice in the lower right here, it does say future dollars in the lower right of the graph. And in general, in Right Capital, we pretty much use future dollars everywhere. We factor in growth, inflation, interest, annual increases, all those rates are being factored in to all of the values that we see across pretty much every area of the software, including the cash flows. So, I do want to highlight that first and foremost, Right Capital primarily operates in future dollars. However, especially for clients that might be on the younger side, sometimes these future dollar values can look pretty astronomical, especially, if the clients are experiencing a lot of growth in their investments over a very long period of time. So, for those clients that maybe are in their 30s or early 40s that are a little bit shocked to see some very high numbers here for the end of plan, portfolio value, you do have the ability to click into the display settings here and switch from future dollars to today's dollars. And this is a pretty simple calculation, actually. All it's really going to do is discount all the values by your general inflation rate. So whatever you've entered into your Right Capital account as general inflation, the default is 2.5%. So unless you've adjusted it, it will discount everything by 2.5%. We can click save here, and that's going to discount everything and show us, what does that actually look like in today's dollars? So it just helps to put things into perspective a little bit, especially for those younger clients that might be a bit astounded by some of the end of plan values that we see for, invested assets and net worth. I do want to use this opportunity to also quickly highlight we did add some additional display settings here, a couple of small quality of life improvements that can potentially go a long way. So these were all based on, common feedback from advisors. So I'm really excited to be able to show these off today. So in addition to today's dollars and future dollars, which, has always existed in Right Capital, we did add two new options for you. The first one is going to allow you to use the same scale for both charts on the probability tab. So I want to quickly demonstrate what it looks like without that turned on. Maybe we have a scenario where we've made adjustments to this client's proposal that cause it to have a much higher ending portfolio value than the current plan, but the size of the bar charts looks mostly the same. And that's because, the scale on the y-axis does change in order to fit that chart in the same amount of space. So, you know, it has a purpose, but at the same time, it can be more visually striking to show a client's, a higher dollar value with a bigger corresponding bar chart compared to a lower dollar value with a smaller bar chart. And by using that new toggle, if we use the same scale for both charts, that's going to lock those both to the same y-axis, whichever is larger. So now we see the dollar values haven't changed here. It's just the scale on the left side that's changed. And now it's a little bit more visually clear. Wow, our proposed plan has significantly higher ending assets than our current plan, and that's more represented by the chart in addition to the dollar value. So again, a small improvement, but can really go a long way in just making that, the impact of those proposed changes you've made even more striking for clients here. The last feature, the last display setting I want to quickly mention is the ability to show the years, calendar year on the x-axis of certain charts rather than the age of the first client. So before I turn that on, I want to quickly mention most of these charts across the other areas of the retirement analysis, the confidence chart, the comparisons chart. Historically, these have always been client ages, in particular, the age of the first client listed in the plan. So in this case, Steph's age. At the same time, sometimes, especially if there's an age gap between the client and the co-client, that's not always visually clear, depending on what's happening in the plan and what we're looking to hone in on. So in those cases, it can be valuable to now be able to switch to calendar year instead of client age. And that's simply going to switch to, showing us the years instead of the ages across the x-axis of the comparisons chart, the retirement details charts showcasing income sources and withdrawal rates. So just an additional quality of life feature for you. If you ever find yourself wanting to swap the client's age with the calendar year on that x-axis, you can now quickly and easily do so within the display settings drawer here.